Welcome to the 10K SOXL Trader channel. Here, I use a starting capital of $10,000 to document real-time intraday trading with the SOXL leveraged ETF, combining multiple quantitative strategies to track the account's daily compound growth. In the holiday-shortened yet volatile trading week of June 30th to July 3rd, our 10K SOXL strategy made its debut. It not only withstood the market's turbulence, but also demonstrated exceptional strategic resilience and execution discipline amidst a fierce struggle between long and short forces. As of Thursday's close, the account's net asset value had steadily climbed from its $10,000 starting point to $10,334.34, recording a weekly return of 3.34% with a total win rate of 53.33%. Now let's take a deep dive into the key decisions, successes, and lessons from these 4 trading days, and look ahead to the dynamic market conditions of the upcoming week. June 30th. A flexible start with both long and short plays. With optimistic market sentiment, SOXL posted a modest gain of 1.23%. The strategy responded swiftly after the opening bell, with a precise long trade capturing an initial profit of 89.83 SOXL to kick off the challenge. The strategy then seamlessly switched gears, adding a small profit from a short position. However, as volatility increased in the afternoon, 2 subsequent trades could not maintain the winning streak, resulting in a net daily profit of 49.33. The first day's results validated the strategy's agility and sharpness, but also served as a warning for risk management in the days ahead. July 1st. Contrarian plays, turning volatility into profit. The market landscape shifted dramatically as SOXL experienced a deep pullback with a daily trading range as wide as 6.70%. Facing dual pressures from profit-taking and technically overbought conditions, the strategy decisively adjusted, shifting from defense to offense. A precise short trade captured the initial phase of the decline. Subsequently, as the price hit an intraday low and showed signs of a rebound, the strategy adeptly reversed to a long position, ultimately converting the market's intense volatility into a net daily profit of $120.40. This day's performance was a perfect demonstration of decisive and agile switching between long and short positions. July 2nd. Riding the trend, capturing the main upward wave. The semiconductor sector made a powerful comeback, with SOXL surging over 6%. The strategy followed the trend closely, with 3 long trades capturing the strong morning rally like a cheetah, banking a combined profit of $305.78 and seizing the lion's share of the primary uptrend. Although some profits were given back due to chasing the high in the afternoon and a tentative short trade near the close, the day was locked in with a substantial gain of $246.39. This textbook execution of a trend-following strategy also served as a reminder. Risk often arrives quietly at the end of a rally. July 3rd. First drawdown, a valuable lesson in discipline. On the final quiet trading day before the Independence Day holiday, SOXL traded in a narrow range. Amidst this high-level consolidation, the strategy faced a challenge. Its first 2 long trades unfortunately hit their stop losses. Although a final short trade recouped some of the losses, the day ended with a net loss of $81.78. This marked the challenge's first daily drawdown. It was not a failure, but a valuable test of discipline, a reminder that reverence for risk is the only passport for navigating through bull and bear markets. Bringing the focus back to the broader market, SOXL's weekly gain of 5.25% not only significantly outpaced its benchmark, the PHLX Semiconductor Index, by 1.91%, but also left the broader tech-heavy QQQ, by 1.62%, far behind. So, looking ahead to the week starting July 7th, the investment logic for the semiconductor industry is becoming increasingly complex. While the long-term demand from AI and 5G remains the core engine driving the sector forward, High valuations and the returning specter of a trade war and tariffs are casting a shadow over the short-term outlook, creating significant uncertainty. The market next week will be a battlefield where technicals, macroeconomics, and geopolitics engage in a three-way struggle. On the technical front, the resistance zone for the PHLX index at 5,750 points and the $2,600 support level for SOXL form a fragile dividing line between bulls and bears. However, we must soberly recognize that in the face of sudden tariff news, any technical support can prove fragile. Unexpectedly negative trade news could be enough to trigger a panic sell-off that completely disregards technical indicators. The drawdown on July 3rd reminds us that discipline is the cornerstone of surviving market cycles. The potential risk of a trade war demands that we elevate this discipline to a new level, not just through strict stop losses and profit-taking, but with a profound sense of humility and reverence for the macroeconomic variables that can change the game in an instant. Thank you for following along. Feel free to leave your comments and thoughts, and subscribe to the channel to keep up with my SOXL quantitative trading journey.